So I think federal tax reform this year is going to be the most complicated that I've seen in my entire history of investing, because many theorists and many people that are dissecting it down, they don't understand even what the current bill entails. And so, whether you use 1031 exchanges or whether you use different depreciation schedules to create a tax advantage, all of that's changing. And so, my CPA this past week told me that you can depreciate a new home purchase for a rental property in 1 year. And that's amazing to think about that. So it changes the entire tax strategy. I've never been one that has invested based on a tax benefit. I believe in cash flow, and I don't always look at, I look at tax or tax benefits as a secondary opportunity. I don't think it's a primary when I make my decision. Aside from when I'm selling a property and I want to avoid capital gains tax. So I will use 1031. I'll file that 1031, avoid capital gains tax, to roll my money into something bigger and greater and better. But I don't know. It's a very difficult landscape right now because it is ever changing and everyone has a different theory today. So over the next 60 to 90 days, it is going to shake out. And most real estate investors that I know right now have already filed their extension because they just don't want to deal with the issues right now.
Yeah, I would definitely agree with that. That's what I'm seeing in all the different RIO groups, that everybody's kind of holding off. They're saying until it's all kind of shakes out and they see the impact on the different investors, are they going to have maybe a trend line or somewhere where we can set a bar? But we're definitely seeing it impacting each of them differently. All the RIO groups are asking for speakers to come out. Everybody wants an accountant right now.
Yeah, I would piggyback on that as well. And I would say, listen, find yourself a really good CPA, somebody that understands that landscape. And regardless of where you are in the investing space, if you're a wholesaler, if you're investing for cash flow like Eddie, or if you're a flipper, there are pros and cons to your overall tax strategy and what you're implementing. I interviewed somebody on the radio very recently, and we talked about cost segregation. So instead of only depreciating one asset as a whole, you can break down that asset into carpet, into all the materials that create and make up the asset, and you can depreciate those on different depreciation schedules set forth by the IRS. So there's an application process for that. It can be costly, but the pros can outweigh the cons there. So definitely make sure that you connect with a good CPA that makes sense.
Yeah, and I know that even where it comes to capital gains, when you're buying to flip, it's a lot of benefit in there. So, to be going into something where this is the largest tax reform, the hit, the market in over, how many years has it been?
A lot.
A lot of years, that really, it is going to take just to, go through kind of a cycle. But what I'm excited about is that, it came down from, kind of a real estate investor driven, that
Focus,
we know it's some benefits there for us. And so finding all of those and knowing that, there's some savings and capital gains. There's also, like you said, being able to depreciate in 1 year. That's huge. And so a lot of these things you do want to connect with a CPA that always knows that does real estate, because a lot of times they don't know all the benefits to take advantage of. Been there, done that, and you look at your tax return, and it's the difference between thousands of dollars of someone knowing what they're doing. So definitely hook up with a good, real estate professional. CPA.
To piggyback on that too, for a CPA, when I went from single-family investing to multifamily investing to commercial investing, oftentimes your CPA needs to change because their focus typically is on one medium over another. The cost segregation has been very, very popular in the commercial space for years, because you would find a CPA that understood it and did it, and they did everybody's. Now it looks like it's going to come into play in the single-family space, but it is really interesting. But it's important to not only get the right CPA, but also to get the right CPA for the facet and style of investing you do.
We definitely hear that too with the referrals. When we were talking earlier, in different scenario, you want to go to the referral that's been to that accountant that's got the experience in the type of property you're investing in.
Sure.
Yeah, not every CPA is created equal. Again, piggybacking on what Eddie was just saying, there's certain CPAs that focus on this. There's certain CPAs that focus on this. find a CPA, just like Sonia was saying, that invests in real estate as well, because then she or he will understand the facets and all the intricacies of what that tax strategy should be, and then, fall head over heels.
And that's it. There's so many gray areas of tax returns
For
that
sure.
if they're looking for those gray areas, they can be found.